You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday, it is noon Central, it is 1 p.m. Eastern. Do you know what's popping off in the world of volatility? Let's find out together, shall we? It is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. Place for unusual activity, all sorts of earnings, volatility data. I know you folks like that, as well as, of course, all of the shows we've ever done since the primordial ooze pre-iPhone days back in 2007, when we kicked off this thing and said, I wonder if anyone wants to hear an options podcast. Fast forward 17 plus years, and the answer is yes. If you like what you hear, this, anything else on the network, do keep throwing likes and stars and comments. We have been doing this for a long time, obviously, but the algorithms all favor the new stuff. So if you want to keep the content flowing, throw a like, a star, a comment. It does help new people, and they are legion. New people continue to discover the content. If you want to discover more content, including you want to come back after this show to chat some unusual activity with myself and the Oracle of New Hampshire there, Mr. Matt from Rhoads, then by all means, head on over to the pro, theoptionsinsider.com/pro. That'll get you in there. Congratulations to the aptly named Mango Lover 75. I love that handle, for winning our May Pro Trading Crate. Get your name in the hat for June. Get the Pro Q&As. Jim Carroll's been on there recently. Scott Nations. A lot of vol talk on the Pro Q&As out there recently. So head on over to the Pro and see what we've got going on. As we see what's going on the old show today, first, let's go out to, I believe, the hinterlands of Chicago, where we are joined once again by the once future and now present Dr. VSTOXX. He's crunching a lot of VSTOXX data these days. Mr. Russell Rhoads. Mr. Rhoads, welcome back to the show, sir.
I love it. Does that mean I've got to get I've got to replace the VIX license plate I just got from my car?
It does.
With a VSTOXX license plate.
You also need a new doctorate, so you have to go through the whole process again. What do you think?
I think I'll be 6 feet under before I do another doctorate, to say the least.
It was a protracted process, to say the least.
It was, and and it was a great nickname for the 72 years that it took me to get that thing.
That was my way of inspiring you to finish it. I knew I gave you that fun nickname, you'd have to go out and earn it, as they used to say in those ads. So there we go, listeners. As we roll on down now to the southern Vol Mecca, I hear they're cooking down there, quite literally. It is Austin, where we are joined once again by the greasiest of meatballs, maybe taking an inroad at you, Mr. Dr. VIX, because we have to call him Professore Meatball now, because he's working over there at Option Pit U. Mr. Meatball, welcome back to the show, sir.
Hey, Mark, good to see you. I'm kind of mad at myself right now because I just wasted an hour watching this clown talk. And
Oh, you watched the Roaring Kitty?
Is that?
I have a headache. I have a headache, Mark.
That's
like,
why you wear those big headbands like he does.
Oh my gosh.
Color me surprised that you came away from that less enthused.
The one thing that's interesting, Rod, is he did show his position. He is long a butt ton of June 20 calls, and he's currently up about $92 million on them. And he's long the stock from about $16, and he is up about 54 million on that. Right now, his total gain is $146 million. He's up 84%. Total market value, he paid $567 for the June 20 calls. His average price paid was 21 and a quarter on GameStop. He's long 5 million shares of the stock, and he's long 120,000 of the calls.
After our infamous debate on the subject yesterday, a lot of people reached out to me saying they think this guy's being bankrolled by somebody, that there's someone behind the scenes pulling the strings out there, that he's kind of just the face for this. So a lot of conspiracy flowing around him. Maybe we'll get to more of that in a little bit as we welcome on our guest holding down the UVX hot seat this week. A return offender. He must have done well the first time. He is Noel Smith, the Chief Investment Officer and Head of Options Trading at Convex Asset Management. He last joined us back in February 2nd, so a lot has popped off in the market since then. Noel, welcome back to Volatility Views.
Hey, it's good to be back.
All right, with the team assembled and our Roaring Kitty data in hand, let's head on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down what the heck is going on today and indeed this week from a vol perspective. It's been a topsy-turvy week. Pretty much the moment after we turned off the microphones on the show last week, pretty much during Options Oddities, we saw that amazing rip-up, 70-odd handle somewhere in that neighborhood in the S&P in the closing roughly hour of the session out there, which surprised a lot of people after we had been looking at a very different day for most of the day, and certainly during our show last week. Again, that just shows you how difficult it is to prepare for this show. And sometimes the moment we turn off the mics, the paradigm shifts again. Then, of course, we saw kind of the inverse on Monday where we started off strong, then got weakness. Then, of course, we had some rallies this week. Coming into today, we had the big jobs number everybody was looking at, and it came in pretty hot. A lot hotter than people expected. So now it comes down to this debate. What environment are we in? Are we in the good news is good news environment, or are we in the good news is bad news? Early on today, it was very much good news is bad news. Most of the major indices were red coming out of this number. As we're kicking off the show here, it seems like we have shifted mid-session. We are now back in the good news is good news for the economy out here. And S&P up now, rallying up about 0.25%. The Dow about 0.15%. NASDAQ off 0.2%. The only ones who still think that bad news, or I should say good news is bad news. I'm even getting twisted on it. Good news is bad news, listeners. For the economy are the small caps. They're off nearly a full percent, about 0.9% right now. So again, a very much mixed bag out there today. I wonder by the time we turn off the mics today, what's going to happen out there in the vol space. All this a long way around to saying VIX easing quite a bit since our last show. Remember our vol views, we always tried to guess at the end of the show whether the juice will remain by the end of the show next week. The big question today was, will the juice be around from the number by the end of the show? The answer so far seems to be a resounding no. 12:30 as we kicked off the show, and looks like it's ticking down even more, down to about 12:20. 12:30 puts us down about 2.3. 12:20 puts us down 2.4 points. from where we were this time last week. Vol going out to the woodshed, getting a bullet. 76 down 8 points from where we were this time last week. So a lot to unpack. Well, let's go around the horn the opposite of the way we started. Let's go out to our guest holding down the UVIX hot seat first. Noel, obviously a crazy week. Let's start really quick. Let's look back right after we turned off the mics on Vol Views last week. What were your thoughts as the market just ripped to high heaven in the last moments of the session on Friday? Kind of did the opposite on Monday. And then, of course, what else has been catching your eye throughout this week coming into today's good news is good news number, apparently?
So there's a lot to discuss there. If you looked at last Friday's rip, a lot of it was in 0 days to expiration options. It wasn't a lot of the meteor options that were kind of taking care of things. So I elected to fade it in a vol standpoint. In other words, I wanted to be more short vol going into that. Ended up working out, call that luck, I don't know. But also what's happened recently is you see some of these large hedges go up, like the D2042 half that traded yesterday. That was a pretty big trade, 20 grand by 100 grand. And I'm pretty sure that's a hedge trade. It's not just a market's going to die trade. And, everything has kind of come off. And now that we have the NVIDIA split today, we have Roaring Kitty talking right now and the stock going down. A lot of stuff is really coming in. And then all we really have to worry about next week is the inflation number on Wednesday. So I think vol is a fade.
Of course, I didn't even mention we had the ECB actually cutting rates this week. A lot of people thinking that added fuel to the Fed rate cut fire. We got the Fed coming up next week. Now today's number seemingly putting the kibosh on that. But let's go around the horn to the greasiest of meatballs if he can pull himself away from the compelling content that is Roaring Kitty. Mr. Meatball, sir, obviously a crazy week. We've talked a bit already about what happened post-Vol Views last week, but any other thoughts if you want to add there? I've heard mixed opinions on pointing the finger at 0 day or not for these rips we're seeing at the end of the day. And then B, what's catching your eye now? ECB cutting rates, and then today's number maybe taking away some of the argument for the Fed rate, and the market's obviously liking what they're hearing.
Yeah, I mean, if you look at the bond market, it's coming off. I'm very interested to see NVIDIA post-split if it does get, traditionally post-split that over the course of a year, those stocks do very well. But initially, a lot of times they get a little bit of a dip. So a scenario where inflation comes in hot, and we just had a hot number here for non-farms, and rates are up, bonds are down, but it's not a huge move. But if we start to see that move accelerate a little bit, that's a scenario where maybe you get a little bit of an increase in volatility. But generally speaking, across the board, the market's been just kind of ignoring this stuff. And, on a day when they sell NVIDIA, they buy something else. And on a day when they're buying NVIDIA, they sell something else. Money is rotating more than it's leaving. And that's part of what's kind of holding up the market as a whole. Now Friday's action, that end of day rip, that major turnaround. What we have an 80 point range on Friday, 85 point range. You've got to imagine that if you look at what was going on upside out of the money calls, you've got to imagine that at a minimum, some of the acceleration there was contributed to by 0 DTE.
All right. And last but not least, Mr. Once and Future, sir, a lot going off. If you have any thoughts as well on the incredible rip we saw almost immediately after we turned off the microphones last week on Vol Views, have at it. And then B, obviously a topsy-turvy week, ECB, NVIDIA, the sell-off on Monday, the rallies, middle of the week, and now today's hot number killing vol, sir. What's catching your eye?
Well, and just to chime in on what Mark was just talking about, I've been a big proponent that 0 DTE is not having an impact on VIX. It's really not having that much of an impact on the overall markets. I do think the end of day rallies that we see when all of a sudden multiple strikes get crossed, and a lot of people when you trade index options, a lot of the strategies you do, you're hoping to hold into the close, and if you just hoping they expire with no value into the close. And when all of a sudden, you're listening to us, you go get a nice cool beverage, and then you come back and there's about an hour and a half left of the trading day, and everything has completely changed. that makes them panic. And as Eddie Murphy says, they're out there panicking. And I do believe that a little bit of panicking into the close when you thought you had a really nice, short index option position, all of a sudden it turns into a freaking nightmare on a Friday afternoon. That's going to cause some trading. That's going to bring in some volume. And the net result when that happens, I think, is a little bit extra volatility at the end of the trading day.
All right, we have a little bit of extra vol out here on the old volatility surface. Spoiler alert, it's a little bit lower than it was this time. I know, shocking. You will be appalled at that fact, listeners. Coming into the start of the show, we have the June future down about exactly 1.5 points from where we were this time last week. The July future down almost exactly a point, about 0.95 from where we were this time last week. This week, if we go all the way out to the beginning of next year, to February, actually, we top out at about an 18. Interestingly enough, that's a slightly higher, about 0.2 of a point higher than what our previous apex was, which was the OCK future. That's at about a 17.85 right now. Obviously not a 20 handle to be sniffed out here across the board. We'll see as we get closer to the election what happens out there, but a lot to unpack. Noel, your thoughts here on what we're seeing on the vol surface and how it's shaping up this week, sir?
Well, if you look at realized vol, it's still pretty low, something in the 9 handle. So if you think about implied versus realized and how much of a premium there is, it's fairly in line with history, and there's really no reason that we have to go up in implied space as far as I'm concerned, unless we start to realize. So again, between the things that are behind us now and Roaring Kitty to stop trading, by the way, those options were over 1,000 vol. So that's probably the most unique thing about today. But the stock's getting pounded, that GME that is. But going back to the vol surface, I don't think there's any real reason for vol to pop here, considering that the index just isn't doing all that much in terms of realized.
Yes, the good old days of 1,000 vol GameStop. I think we all missed that, right? When we got it back.
Oh, and Mark, one thing I wanted to mention, you mentioned that maybe Roaring Kitty was backed by somebody else. I also heard that, but he did go on his live stream and say that he wasn't. So
okay,
who knows?
Well, we have to take him at his word, I suppose. But yes, there's a lot of conspiracy, including in our chat. Mark, congratulations. You have sent our chat into a Roaring Kitty frenzy. They're all chatting about Roaring Kitty right now. So well done, sir, there. But
glad I could help.
What's catching your eye on the vol surface right now, sir?
To Noel's point, realized vol, when you look at it, like using Garch, is really low, and there's a really nice spread between VIX and realized. What's interesting is, up until about yesterday, we'd seen a nice uptick in average true range. And average true range is pricing at about $46 a day in the SPX. So that gives you maybe a little bit, it's still below where the VIX is trading, but a little bit higher. There's a little more volatility than you read just looking at something like Garch. But he is right. Vol is low, and the vol surface is pricing in some continued pressure on VIX and volatility. I was kind of playing around with some different VIX ideas and expiration plays as the VIX pulls back. This morning, VIX, the June future has dropped 30 cents since an hour and a half ago. GameStop kind of pulling back a little bit is probably bullish the market. I think you and I both agree that this nonsense is usually not a great sign for the market. And we're seeing some continuation on that.
1,000 at the money vol in GameStop is not a bullish trend for the market.
No, I actually picked up a couple of baby puts that expire today to see if we get.
Were they like 10,000 vol? What were you paying for those things?
I paid, so they're the 25 puts. They expire in at 2 hours and 40 minutes, and I paid 90 cents.
Wow. And that was about an hour ago or so, right?
That was like 20 minutes ago.
Oh, okay. So you're just loading up on some puts while we're talking.
Yeah, nothing crazy. I literally dabbled. Like, I'm spending less than $200.
90 cents.
Don't go crazy here.
Wow, 90 cents. Yeah, that's what they tell you in the first page of Natenberg, right? GameStop.
Oh, yeah, pay infinite vol. So the implied volatility on that strike is currently 1,200, and I'm down $20 on my puts.
Ah, yes, this is the good stuff. This is why you're here, listeners. The 1200 vol GameStop. We all missed these days, listeners. Mr. Rhoads, sir, if you have any thoughts on 1200 vol GameStop, have at it. And then B, what's catching your eye out there in the vol surface this week, sir?
Well, I'm playing. You know how I like to make charts while you guys are talking, and I was I was pulling the 30-day at the money implied volatility for GameStop, and it started the year around 60, and it's up around 350 as of yesterday. So that's always a fun thing to try to explain when I'm discussing implied volatility in the classroom. How can it be more than 100%? Well, it's an annualized 30-day number, so that is very much of a possibility. When we see, and they did just, I saw they reopened GameStop. You might be, Mark, Sebastian, you stick around, you might be okay.
Yeah,
you just might be okay. You know,
if I lose, I lose. But it was funny that we've got Noel on because I 2 weeks ago he texts me and goes, "Dude, are you trading GameStop?" And I was like, "No." He goes, "Dude, what is wrong with you? There's like free call spreads and put spreads everywhere." And I was like, "Oh." So I turned around and started trading it, and I was very glad Noel texted me.
Yay. I'm trading it as we speak. And kind of what Mark was saying, if you go out there and you're willing to take leg risk on one or two options at a time, you can basically trade as many free call spreads or close to free as you like. And I'm doing the same thing right now in puts. I'm, basically leaning on the buy side first, but then I immediately look to sell something that's further dated or further away in strike. And if I can do that, for zero or sometimes a credit, I'll take it. Free optionality is my favorite kind.
If you're wondering, listener, why people sound distracted during the show is because they're legging in to crazy GameStop 100%. Put and call verticals. Mark, if you can survive a 1200 vol crash and still make money on those puts, that would be certainly impressive. That's some serious movement going on out there to make up for that. But there you go, listeners. Yeah, we're outside the realm of the textbooks now when we're talking 1200 vol. Good stuff. Let's see if all this madness mixed together, if it means we're seeing a banger day on the VIX options front or not. And the answer is kind of yes. We did have a hot number coming in this morning, so you usually expect some paper on days like today, and we're kind of living up to it. Not quite a million or, anywhere in that range, but about 683,000. So certainly respectable, especially when you consider that our ADV is closing in on 850 again, 847. So, everyone says the old adage, I'm not going to repeat it, but we're heading into that seasonally quiet period, at least for vol and for the markets and for trading. And yet VIX ADV continues to move north. Maybe an interesting signal in there. 850 right now, so threatening 900,000 contracts a day in VIX. That's nothing to sneeze at, especially coming into the usually tepid summer months, up another 27,000 contracts this week. So VIX continuing to find some paper out there, which again, we're whipping 70 handles after the bell one day, or after the close of this show one day, ripping another day, NVIDIA, ECB, now the number. There's a lot of catalysts going on out there driving this flow. In terms of top 10, I know a lot of you have been waiting for this moment, listeners. You're like, when are my puts going to make it into the top 10? Well, this is the week. If by two is a lot, because that's double what we've had pretty much ever this year, I think. So 2 whole puts, count them, in the top 10 this week. Let's see how quick we can find them, listeners. What's the big dog position to kick things off? How much does it cost you to break into the top 10 in VIX options right now? It's 207,000 contracts. That gets us to the July 18s, followed by number 9, 207,000 as well of our first of 2 puts, the June 14 puts. Number 8, 212,000 of the July 19. So some fairly reasonable, all things considered, call strikes starting us off here. Number 7, also 212,000 of the June 35s. Oh, as soon as I say that, we're right back at it, listeners. Number 6, 222,000 of the AUG 47 halves. There's my favorite strike. Number 5, 230,000 of the June 18s. Number 4, 239,000 of the June 13 puts. Number 3, 241,000 of the June 20s. Number 2, 289,000 of the June 16 calls. Again, fairly reasonable. And the number 1 size position yet again this week, listeners, dominating the board in VIX options, 494. So nearly 500,000 of the July 20s out there right now. So intriguing stuff across the board. Speaking of intriguing stuff, listeners, we're all intrigued by Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, fought with me at first. Didn't want to go a second time, but it's the theme so nice we have to play it twice. Listeners, Mr. Rhoads, sir, what caught your eye in the world of weekly VIX options this week?
This was a quiet week. There's just no other way to put it. You used to rib me a bit because there would be weeks where I was just basically making up trades, but. I'm joking about that before anybody takes me seriously. But there had been weeks in the past where I was really stretching to talk about stuff. And the past 3 or 4 weeks have been real easy. There was a lot of interest in the June 5th calls, which whatever they thought was going to happen didn't happen. So that's that for that one. This week, going back to Monday, and this is kind of a fun trade. Somebody on Monday with the spot VIX at 13.15, they sold 100 of the July 3rd 20 calls for 38 cents, and they bought 100 of the July 3rd 20 puts for $5.97. Now that your astute listeners can hear that and then go, that is a synthetic short. And it's same as being short at 14.41. Now, why in the world would you do this 100 lot instead of trading the futures? Well, the July 3rd futures at the time were 13.50 by 15.25. So we had that spread that people kept driving trucks through. So they turned to the option market to basically get the same position as being short 10 of the futures. Kind of a nice trade because they've got between now and July 3rd, they've got $1. I'm doing math now in my head. That doesn't work. About $1.25 between their price and where the spot was. It's summertime. July 3rd expiration. I think we all know that Independence Day comes after that. So you're going to be talking about VIX that settles on the open on a pre-holiday Wednesday. Before we get, Thursday. And you can't tell me a lot of people aren't just going to go ahead and take Thursday and Friday off together. So I kind of like that trade, just taking advantage of the big spread that they could lock in, even though it's a few weeks out. And I would not be the least bit surprised if the open interest sits right there at 100 contracts between now and July 3rd, and they hold on to that one. One other trade, not necessarily thrilled with this trade. On Wednesday with spot VIX at 12.90. Somebody sold 100 of the June 26th 13 puts for 26 cents, and they bought the same number of the June 26th 12 puts for 5 cents. So they're taking in a credit here of 21 cents and a potential risk of 79 cents. I just don't like the risk reward that much on that one. I didn't look to see if there's something event-wise that might, that might push VIX to a higher level. But it is summertime. It is kind of a quiet time for the markets. And that's my weeklies trade that I'm not particularly thrilled about. And then finally today, somebody came in with VIX at 12.50. They sold 2,000 of the June 12th 18 calls for a nickel. That appeared to be opening. I hope they're doing something else against it. I can't imagine what, but it was done in several lots as well. And then also today, and I don't know what side this was because there was no posted bid ask at the time, but it's worth pointing out with VIX at 12.83, somebody traded 199 of the July 3rd 50 calls for 8 cents. I doubt, my guess is they are buying these. Because I feel like if they were selling, they might have only gotten like 4 or 5 cents for them. So that's where we're at with that one. I don't like that. I don't like that trade either way. If they're buying or selling.
Betting on a literally explosive July 4th holiday. That's what he's betting on there, I guess.
That is what I was at a fireworks display when I was 17 back in Memphis, and everything exploded. So I always chime in with my friends that were there that day. The Great Hungry Fisherman 4th of July disaster of 1985. Maybe they're expecting that to repeat itself, but also impact the markets.
Clearly expecting an explosive holiday out. Yeah, you're right. And everyone at this time last week, there was a ton of paper going up for that June 5th expiration.
It was multiple days.
Yeah.
Multiple weeks.
Yeah.
I had to fish through all the June 5th bullish trades to find some other things to talk about.
I guess
and there was a lot of paper for on Monday and Tuesday, but it looked like people that were just salvaging, like getting what they could for some of their long calls, selling them at 3 and 4 cents. So they did whatever they thought was going to happen. I think they were anticipating last weekend.
Yeah, I guess they thought something the weekend, maybe ECB screwing the pooch. I don't know, something along those lines. Yeah. But whatever it was, it did not materialize, listeners. Let's see if the volume materialized this week. Spoiler alert, the answer, as I already kind of let you in on, is kind of yes, including today. 683,000 contracts on the tape. Russell was just talking synthetics. It does seem like it's synthetic season these days out there in VIX options land. Few of them have been lighting it up for a while now. Maybe getting back to what he was alluding to earlier with some of the spreads out there in the VIX futures. Also, obviously, you can do some hedging in the options side that you can't do in the futures. Like today, the big dog, 100,145 of the AUG 17s against about 100,000 exactly of the SEP 42 halves. Digging into this one a little bit, this has a lot of moving parts to it. Looks like it's another one of these funky multi-leg synthetic pieces. Looks like they're long call, short put on the 15 strike. And then also got the 17 calls in August against it, obviously 100,000 times. And then maybe just for fun, because it is part of the spread, also a kicker of the SEP 42 halves for 28 cents. 100,000 times exactly. Probably selling those bad boys. So funky ratio, long synthetic. We're seeing synthetics in all shapes and sizes out there right now. But that's dominating the paper today. Outside of that, there is a kind of funky risk reversal as well. We got the June 13, 14 risk reversal or strangle, kind of went up exactly mid-market. Looks like they're pricing it more towards the risk reversal. The put was over, so 52 cents for the put, 40 cents for the call. If they did buy that June 13, 14, that's pretty tight. If they did buy that, they obviously paid 12 cents for that. That's kind of our number 3 and 4 there. 65,000 total now. The June 13 puts 56,000 of the June 14 puts. And rounding out the top 5 today, let's go out to August. 46,000 of the AUG 15 puts. So all over the board today. Yesterday, if you want more crazy, we got it for you, including what Noel was just talking about, some funky upside. Also a subject of our flash poll this week. But 128,000 was the big dog. By the way, the total volume 1.01 million. So yesterday, indeed, a banger out there, listeners. The big dog, 128,000 of the July 19s, followed by 100,000. Again, exactly. These numbers, this size, kind of makes you wonder. Someone likes that 42 half strike kind of across the board, either to override it like they did today, or yesterday they put up 100,000 of the D's 42 halves for 53 cents. Again, splitting the uprights. We have it out to you folks right now. You are the ultimate arbiters at the end of the day. D's 42 halves, 100,000, 53 cents. Are you a buyer or a seller at that level? And right now, 2/3 of you exactly are saying you're leaning towards the short end of that equation. So we'll update that throughout the show, but kind of intriguing there. Followed by number 3, 75,000 of the July 16s. Number 4, 44,000 of the June 14s. And rounding out the top 5 on a pretty active day yesterday, 32,000 of the June 13 half puts. Wednesday, not quite that level, but still decent volume, 689,000. The big dog, 72,000 of the June 13 puts, followed by number 2, 58,000 of the AUG 42 halves. Again, it's like 42 half is the new 47 half strike. It's very popular. Number 3, 36,000 of the June 16s. Number 4, 31,000 of the AUG 20s. And number 5, 26,000 of the June 18s. Tuesday, kind of the sleeper day of the week, 521,000. The big dog, 49,000 of the June 14 puts, followed by 48,000 for number 2 of the June 14 calls. Maybe we got some of that synthetic action going again. Number 3, 38,000 of the June 13 half puts. Number 4, 36,000 of the D's 18s. And rounding out the top 5 on a sleeper day, 26,000 of the June 23s. Monday, decent start to the week, 780,000. Remember, we had that early rally and then that fade. So kind of the inverse of Friday there. 120,000 was the big dog on Monday of the AUG 17. So I guess if you had to pick a couple of strikes this week, it's obviously 42 half and it's also 17s, and this time in August. So they're pretty active there as well. 120,000 of those bad boys on Monday opening there. So opening paper. Number 2, 69,000 of the June 20s. Number 3, 50,000 of the AUG 15s. Number 4, 50,000 as well, the AUG 15 puts. That's right. I think we did talk about there was another one of those synthetics, I think, versus the AUG 17s there. So this synthetic versus upside call action has been going on for a while. Somebody really likes it. And number 5, 21,000 of the July 15s. Noel, you said you watch a lot of the VIX paper, including this big block that is now our flash poll out there, the DECE 42 halves. If you have any further thoughts on those, have at it. And any other prints this week catching your eye out there in VIX options land?
Well, the DECE trade, I'm pretty sure, is a hedging trade. So I don't look too deeply into somebody that does a 1x5 hedging trade, the 5 leg just being to mitigate the price of the 1. And if that's against a larger book, I don't really glean too much knowledge from that. The one thing Russell said was the July 3rd trading, the July 3rd 50s trading for 8 cents, which makes 0 sense if you can buy the 47 halves for the same price. And you can buy, something, 10. So those types of trades always baffle me. Why would you spend 8 cents when you can spend 9 cents or something that's much more likely to work if it works at all?
In this post-meme stock era, that is the head scratcher for me as well. We've seen a lot of that going up. Mostly I like out of those GameStops and others where you see people, NVIDIA, people trading calls hundreds of strikes above where they can get an equivalent call for the same price, literally hundreds of strikes lower. And so that kind of stuff, you're right, that baffles me as well. I'll never see an answer to that makes sense to me. Mr. Meatball.
Well,
good.
Sorry. I would say that's exactly the trade I was talking to Mark Sebastian about, which is, if someone's going to pay, say, I don't know, $1 for the highest strike on the board, but yet, if you look at 1 or 2 strikes in the money or deeper in the money than that, they're also trading for $1. Well, why would you not take that spread for nothing? Just do it for 0. Do it for 0 10 million times. Who cares?
Yeah, again, that's why people haven't cracked the Natenberg in a while, apparently. Mr. Meatball, any big prints catching your eye out there in VIX options this week?
Yeah, I was looking at the one you were talking about earlier today, or just now with August versus September. Did a little digging on that, and here, let me pull this up. I think they might have been closing the August and opening the SEP. The August, the open interest is about 200,000 on the August 17s. Or they're adding on Monday. They traded 120,000 of these, 100,000 of which went up for $1.30. 117,000 of these were sold at $1.34, tied to futures, the AUG 15 using the AUG 15 combo, and then today they are buying the 17 calls. It appears they're buying those. Trading the 15 combo to unwind, and then opening a new sale up at the 42 and a halves. That's kind of what it looks like it might be to me. Really busy day today. I think I saw, some DECE 42 and a halves yesterday that they traded 100,000 times. When I saw those, I was like, oh, Mark's going to like these. That was exactly mid-market, so I'm not exactly sure what they did there. But we also saw the July 16-19 1x2 call spread go up, and some SEP 17, some other things like that on Thursday. That 1x2 kind of interesting. If you're mildly bullish vol, it's a way of expressing that. On Wednesday, they sold 55,000 August 42 and a half calls on the 5th. Gotta love that. Who doesn't want to collect 22 cents for, blow up risk? I know I'm all over that. I'm kidding. That was really nothing huge on Tuesday, and then Monday, like I said, I already talked to you about the 17 calls being sold. Maybe it's a reposition, maybe it's a weird time vertical. I'm not 100% certain what's going on there.
Yeah, you're right. Now that I look at the paper from earlier in the week, I do think those AUG 17s are definitely being rolled out there today. It does seem like we're in combo season again. Like, all of a sudden, we're seeing a ton of these for size with all sorts of out-of-the-money call kickers. Are you noticing these as well, Mr. Meatball?
Yeah. I mean, they're doing a lot of stuff tied up. I think vol is low enough and the curve is flat enough that the curve's in a contango, but the spread between futures and the cash is relatively tight. historically. So, July is less than $2 above the cash. Even August is 2.5 points above. So, some of these tied up trades make some sense.
And let's see what makes sense in the international vol market. It is time for the International Volatility Review.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of VSTOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European volatility benchmark, at www.eurex.com/VSTOXX.
All right, everybody, welcome to the International Volatility Review, where we peer a little bit beyond our shores. Now, there is some vol to be found out there as well. There are some events that tend to drive vol out there. Let's kick things off in the land of VSTOXX, as we are wont to do. As you might guess, a wee bit lower than it was this time last week. Obviously, the closing cycle, they're a little bit different than what we got going on here in the U.S., so not as much overlap with that number from this morning, but still down 1328. Coming into the start of the show, last week we were at a 14.14. It puts us down about 0.86 on the week. If you're wondering, we're a little north of a point above that 52-week low, which is at about 12.12, which we set back in December of last year, and again, kind of threatened back in just a few weeks ago. A 52-week high, 23.33, so obviously hanging out at the lower end of our yearly range, which you would expect. Before I toss it to Mr. Rhoads for his analysis, Noel, I'm curious for you, just in general, how big of a factor when you're out there constructing your portfolio and analyzing the full volatility market, how big of a factor is the international side of the vol space?
So I used to have a guy that worked for me who traded VIX versus VSTOXX, and eventually went poorly for him. And so since that time, I haven't given a whole lot of thought to VSTOXX. And now at the EQD Derivatives Conference in Vegas a week and a half ago, Eurex was nice enough to invite me to one of their things, and it's got me reinvigorated thinking about, what trades look like. And I like the VSTOXX from the standpoint that if you look at the EuroStocks, you got ASMEAL, LVMH, SAP, and a few other names. So my point is that the constituents of the index are substantially different than the constituents of the index in the U.S. Plus, you have the vicissitudes of the European stock market relative to the USA market. So I think that they don't map each other exactly, of course, nor should they. So I think there's opportunity there. But I also think that something like a basis trade does have some inherent risks. So I'm just thinking it through, and I haven't put on a trade in VSTOXX, so I don't have an educated opinion on it.
The risks of the basis trade. Mr. Dr. VSTOXX knows a thing or two about that. You've been slinging VIX versus VSTOXX and flipping it for a while now, sir. Give us an update. What's the latest on your trade, and also what else is... Oh, good.
Go ahead. I was going to let you finish up.
By all means, sir. Have at it.
All right. I'm long VIX, short VSTOXX. That position's basically been in place except for like a little head fake recently. Typically, in just because it's relatively new talking about VSTOXX, what I do is at 10 a.m. every morning, I take a look at where the front month future is in VSTOXX, where the front month future is in VIX. And that is my spread close. I just feel you got to pick a time, and that's the time that I picked. The average spread, typically, VSTOXX is at about $1.65 premium to VIX at that time. And I'm using about 10 years of history with that. So I think that's a pretty solid number. As of 10 a.m. today, VIX was actually at a nickel premium to VSTOXX. And like I said, that's the position I have on right now. I got long VIX at 1345 on the Monday of May expiration, and now it's at 1420, so I'm up a whopping 75 cents there. Shorted VSTOXX at 1350. It was at 1415. It's a little lower now, but at 10 a.m. I was down 65 cents on that. And that position, I think, has been in a range of up and down, either down a dime or up a dime. Things have been very, very quiet. In fact, on the 21st, 22nd, and 23rd and 24th of May, VIX was at 1340 and VSTOXX was either at 1360 or 1365. 4 days in a row that they were all just kind of there at the same level. So it's been relatively quiet. Now, you would have thought with an ECB announcement on the horizon that things would have widened out, and they did Tuesday. My pricing on Wednesday was after the ECB announcement, but on Tuesday, the VSTOXX was 15 cents higher than VIX. That's widening out in this day and age. So both of them are at fairly low levels. My little systematic approach has me long VIX and short VSTOXX, but we're probably going to be flipping that around in the very near future. And then a couple of trades that I came across, really nice big trade. Where's that list? On Monday, we had a 13,000 lot with VSTOXX at 1375. Somebody sold 13,000 of the June 18 calls for 22.5 cents. I'm hoping they own futures. They didn't buy futures at that time, but I'm sure hoping there's something long against that.
Just blasting away at the upside in VSTOXX. I love it.
Yeah. And then we were talking about 42.5s. This isn't exactly the same kind of 42.5, but on Tuesday, the other big trade of the week, somebody came in and sold 6,000 of the July 13 puts for 42.5 cents. So I guess that's our number of the day. And that's when VSTOXX was up at 1490. Probably feel okay about that trade. I like that trade better than if the selling of calls was a naked sell. But that one seems to make a bit more sense to me than selling the 18 strike calls at 22.5 cents. I did want to, you didn't turn to me, and I did want to just throw something out there very quickly with your top 10, with the top 10 options in the VIX space. I don't recall farther months being that many of the top 10 lately. So it's just interesting to me that July and August is already working its way in there when we got a couple of weeks to go for June.
Yeah, you're right. They are, let's say, overrepresented this early in the cycle there, which is kind of interesting, including my favorite, the AUG 47.5s. Can't get enough.
And just a public service announcement, because I'm all about calendars and all that other kind of stuff. June expiration's on a Tuesday this month.
Oh, right.
Because of the Juneteenth holiday.
Oh, yes.
Yeah.
Yes.
And credit where credit is due. I bumped into Dan Deming and we were chatting up stuff. And he said, he brought that up because he knows I do trades that I roll on Fridays, and we were talking about would I roll them on a Thursday or not, or how do I handle that. But I really wasn't even paying that close of attention.
Way to go, Dan Deming.
Yeah, thanks, Dan.
You know who is paying close attention? It's the listener. So we're coming up against, I'm going to cheat and we're going to jump, because not a lot lighting up in the vol ETP space this week. We're going to jump to a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right. And as always, our live chat is running during all of our shows, listeners. And thanks to the meatball, they've been derailed by all the roaring kitty talk. I see a lot of talk about shorting GameStop. Hopefully that was with the options, not with the stock. Nichols out there saying he's going into what people have been saying. Roaring kitty thinks is a face for someone else, doesn't have these kind of resources. There's people debating who could be behind that. Some people saying they think it's just him. So a lot of back and forth out there. Some people think he's on both sides of the trades. There's a lot of conspiracy in the air around this, listeners, which again, I'm not the biggest regulatory fan, but sometimes maybe shining some light on this stuff isn't isn't the worst thing at the end of the day. Speaking of shining some light on things right now, listeners, you folks are back and forth on these Dees 42 halves, whether you like them or not. You love them, you hate them, you love them, you hate them. Then you're evenly split. Right now, we're back to 60-40. You want to sell them versus buy them. Again, this is just a flash poll. This is pretty much live during the show, and then we'll keep it live for, let's say, an hour in between vol views and oddities. So you got to be following us at Options to get your voice and your choice off pretty quick. This week, we also have a lot of people coming in via the YouTubes these days. We're doing some more over there. We're trying to restructure it over there. We've obviously had it for a while, but we don't use it as a primary vehicle for us. We've actually been trying to restructure, and it's kind of reposting some of our old stuff out there, which is interesting because folks are diving into that again, including A-Man. Goes by the handle A-Man, chiming in from an episode over 100 episodes ago, episode 460. No place for the timid. So he's going back into the YouTube archives a bit. But he has an intriguing macro sector kind of question. He says, what would you say is the most resilient sector during periods of high market volatility? Because you're our guest, I'll give you the dubious honor, Noel. If you have a thought, high market volatility, what would you say for A-Man here is the most resilient sector in your view, sir?
Utilities is probably my first answer. And you have to look at what is the source of the volatility? Is it a macro volatility that manifests from interest rates, or is it something more idiosyncratic like an NVIDIA or a Volmageddon or something like that, which in case it's not. So if it's a macro risk off and it's coming out of rates, then I would say utilities.
Interesting. Mr. Meatball, Mr. Once and Future Doctor, anything to add there? Maybe you disagree vehemently?
No, he's
utilities
probably right.
At IU, I do teach about the economic cycle and what stocks are supposed to do well and which ones are not supposed to do well during different periods. And, any defensive stocks, any consumer staples, I always say you can't go wrong buying Walmart, because when things are really bad, the Target shoppers move to Walmart. And when things are really good, the regular Walmart shoppers come back.
Yeah, I mean, it's not really a sector. It's more of a micro side, but you can always look at the exchange complex as well. They tend to fare well, especially certain ones in those types of environments as well, So high volatility typically translates to higher volume, unless it's, Volmageddon time, and then everyone takes their ball and go home. So barring that relatively elevated volatility, those usually fare pretty well. Again, not a sector, but an area you could certainly look for. Interesting question, A-Man, taking us in a different direction. But now it's time for all of us to point our guns firmly at VIX and at VSTOXX. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, let's do it. Let's do the dance we've all been waiting for. VIX cash was at about a 12.30, almost I said a 12.20 when we kicked off the show. It has continued to erode a little bit. It's about a 12.13 or so right now. We also said VSTOXX coming into the show today had closed at I believe a 13.28. Let me pull that up exactly. Yeah, 13.28. So VSTOXX 13.28, VIX at about a 12.13 right now. I was looking pretty good. If my VIX was VSTOXX, I'm a winner chicken dinner. But alas, it was not. My VIX was 13.37. So I was betting that the vol would persist a little bit, not a ton, but a little bit from the number today throughout the end of the show. VSTOXX, I was at a 13.87. So I'm kind of splitting the uprights there, but to no joy for me. The Rock Lobster was on with us last week. He was feeling a lot of vol. 15.5 for him. VST and VIX 15.40. He saw a VIX premium for VSTOXX. No joy there. Russell, you were also feeling more juice. 14.01 in VIX, 14.21 in VSTOXX. So nearly a full point high in VSTOXX. No joy for you either. And we had our guest last week in the UVX hot seat, Steve Sosnick from IB. He was also feeling more juice and also a premium to VIX. 15.21 for VIX, 15.01 for VSTOXX. So no joy for any of us. I guess I'm the closest if you got to go winner chicken dinner, but I won nothing this week. Just was the closest. So all that a long way around, no winners. So that means, Noel, once again, you get the dubious honor of going first. If you just want to do VIX, that's fine. Or if you're feeling daring, you want to do both, have at it, sir.
Well, my education on VSTOXX is very lacking, so anything I said would be a rank guess, much unlike my super educated VIX opinion, which is spot on for sure. For VIX, I would say, 11 in high change. I don't really see any real reason that we're going to pop outside of hot inflation next week. So if you look at all the catalysts that have kind of been baked into where we are now, a lot of them have come off. And other than idiosyncratic risk, I think we go down. So my opinion on VIX would be like 1175, and nothing to say really on VSTOXX other than a rank guess.
1175 on the VIX front. Mr. Rhoads, what are you feeling for VIX and VSTOXX this time next week, sir?
I'm gonna go with big round numbers. I'm gonna do 12 and 13 respectively.
Going right to the easy block
12
numbers
and 13.
12 and 13. It makes as much sense as the Meatballs palindromic nonsense. Speaking of which, it is that time. Mr. Meatball, sir, what palindromic nonsense do you have in store for us this week?
So, maybe CPI comes in hot and we get a little bit of a bounce. Let's go 1331 and 1441.
There we go. It does limit your range, sir, I will say, on your choices. 1441, so a nice full 1.1 point premium over there for VSTOXX. As the closest, I get to go last this week, so I'm going to feel, I could see a lot of arguments for the continued drift. We do have, as Meatball mentioned, CPI. That could potentially, and we do obviously have the Fed next week. I think a lot of people thinking that's a done deal now, but that is in the offing next week as well. So there is the potential for a little bit of juice, a little bit of action. I'm not feeling a ton of it, though. Russell was already at a 12 even. I was thinking pretty close to where we are right now, so I will give him a little bit of breathing room. I'm going to say 12.25, even though I got to admit, as I type that, I don't love it. And then I'm going to say for VSTOXX, a little bit of a premium, I'm going to say 12.85. So there's your markets, listeners. On VIX, Noel's at the low of 11.75. I'm at 12.25. Actually, Russell's at 12. I'm at 12.25. The Meatball at 13.31. At VSTOXX, I'm the low at 12.85. Russell's at a 13, and Mr. Meatball at a palindromically appropriate 14.41. All right, that music means we have come to the end of another compelling journey through the world of volatility. And Mr. Noel, before we go, sir, if folks want to reach out, see what you have cooking over there at the land of Convex, where should they go? What should they do?
Sure. On Twitter, I'm at Noel Convex, Noel Convex. And our website is convexam.com, which is like Convex Asset Management.
There you go. Check him out, listeners, in between episodes of this show. He'll dive deep into all his roaring kitty love for you there on the old show. And Mr. Meatball, if they have said roaring kitty love, they want to debate buying options at a 1200 volatility or anything else, where should they go? What should they do?
Yeah, what's funny, Mark? Everybody on the podcast today is going to be at my event in Chicago, which is a little bit over 6 weeks. Which is a little bit over 6 weeks away. If you want to listen to a live podcast of Option Block, you want to see Russell talk, you want to have Noel's going to be keynoting one afternoon. And you want to hang out and get a steak on me and go to a Cubs game, then this is the place to be. I'll Slack you a link, or I'll Skype you a link, Mark, if anybody wants to sign up. And stay tuned for we'll have the streaming option available in the next week or two if you want to just watch remotely.
There you go. Should be a fun time. I will say the most delicious steak you will ever have is the one paid for by Mark Sebastian, listener. So it's worth attending for that reason alone. You can learn more, of course, optionpit.com. We will all be there. Will you be there or be squared? And Mr. Rhoads, sir, if folks want to dig deep, maybe discuss some more of your VIX versus VSTOXX trades or some of the flow that's going on, or maybe check out your most recent research, where should they go? What should they do?
Follow me on Twitter, just my full name, at Russell Rhoads. Anything I do, I put up there. I've got a Substack that I'm trying to be more active with. Now that I've got summertime with me and I'm past teaching a full load, I'm starting to put a few more things up there. And then I did want to revert real quick, because we do always talk about me and SVIX. In an hour and 59 minutes, I'll be out of SVIX.
You're
It's
done.
all going to get called away from me.
You wash your hand. What strike did you sell now?
46.
you're saying you wash your hands forever of SVIX.
No. So we'll get back in.
You gonna sell some puts to get back in? Jim Carroll didn't dissuade you?
I'm gonna sell some puts to get back in.
I'll have to get him back on.
I did sell some 42 puts, and they're expiring.
I'll have to get him back on to discuss his prohibition against selling SVIX puts and all sorts of fun. In the meantime, listeners, you can check out Russell over there, full name on the old Twitter. If you like the research and the data on all things VSTOXX, you want to see some of these trades for yourselves, of course, at eurex.com, EUREX.com, the place to go, or just STOXX, STOXX.com. Both of those will take you through to the VSTOXX page. You can see historical data, trades, all sorts of fun stuff, open interest out there. Again, it is intriguing seeing what's popping off in the international vol waters as well. But that's all that's going to pop off for the show today. If you're on the on-demand side, that will conclude your broadcast week with us. Thank you for joining us throughout the week. If you missed anything, it's all there for you, of course, on the network. If you're in the pro, I'm looking at the pro right now. Their VIX guesses are all over the place. We got 12 handles, we got 13 handles, we got 11 handles. I guess that's what makes a market, right, listeners, at the end of the day? So people are all over the place, which is fun out there. If you want to join us in the pro, you want to join us for Options Oddities coming up in a little bit. You want to get your name in the hat to potentially win a pretty cool custom pro trading crate, as well as, of course, the awesome pro Q&As where we go deep into vol on those, listeners. It's crazy. TheOptionsInsider.com/pro is the place to go. So if you're in the pro, we'll see you back here in a little bit for Options Oddities. Otherwise, we'll see you back on Monday on the regular network for the old OB all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European volatility benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.